and welcome to AROBS Q3 2023 results call. My name is Zuzanna Kurek and I'm Investor Relations Manager at AROBS Transylvania Software. Thank you for joining our call to discuss our performance in the first 9 months of 2023. I am joined today by Voicu Opranu, CEO and founder of AROBS, Bogdan Ciungradi, CFO of AROBS, and Cristian Prevenda, IR Officer at AROBS. We have published our Q3 2023 results last week on November 15th after the Bucharest Stock Exchange market closed. You can access the report either via BVB's website by going to AROBS profile, or you can find it on arobsgroup.com, AROBS for Investors section. Before we begin, I would like to mention that this call is being recorded and that the recording of the call will be updated on AROBS website tomorrow, the latest. As stated in the call invite, by joining this video conference, you automatically and implicitly agree to being recorded. If you do not consent to being recorded, please leave the call. In terms of the general organizational aspects, we will follow the call setup as we had previously. This means that firstly, Voicu Opranu, together with Bogdan, will deliver a presentation outlining the Q3 2023 results, and later we will have a Q&A session. Please note that all participants are on mute. If you would like to ask a question, please type it in the chat box. Feel free to do it during this teleconference, and we will answer all the questions in chronological order once the presentation of the management is over. Last but not least, I would like to mention that we might be making forward-looking statements today during this call regarding the future performance of AROBS, and that actual results may differ materially. We encourage you to review the disclaimer that we have included in the presentation, which you see right now on the screen. This disclaimer applies equally to all the statements made in today's call. Thank you for your patience, for clarifying the organizational aspects. We are now ready to kick off our Q3 call, and I would like to invite Voicu Opranu to share the key highlights from the first 9 months of 2023 and the last quarter.
Thank you very much for being here. The first 9 months has been kind of challenging, I would say, for us. And especially, I would like to underline a few of the aspects in the service area. Mostly new customers are delaying their decision to invest and to develop new projects, and that put us a little bit on hold, I guess, for some projects. Also, there are demos that we are doing, and what we do is, unless the customer is fully in the cooperation with us, it's really difficult to convince them to start a cooperation. And some of the customers are also being very cautious in this current economic situation, and they delay their decision to continue or to expand their cooperation. But so far, we are successful, and you see during the results in growing the figures, and we are leveraging, and we consolidate right now all the operation that we are doing right now for the integrating the companies that are with us. Our most important aspect is to consider the client in the center of our cooperation, and through the different verticals that we have, we add more synergies and develop comprehensive services around the customers. And also we adapt, as we did before, to different needs of the customers, and we add resources that are really important for them in order to navigate this market situation right now. So our organic growth strategy is, as you will see later, the growth strategy is really good. We in the first 9 months we grew on 2 areas, also in the service side and in the product side, plus through the organic, also to the external acquisition, and also the greenfield that the seeds that we planted last year for developing projects for local authorities, capitalizing the PNRR, the local money that are in, are really adding value, as you will see. Not so much margin for the time being, but we are working on that for the next period. So those are in few lines. I guess those are the challenges that we have. Also what we are doing to overcome those challenges. And as key indicators for the first 9 months, we reach approximately 70 million as a turnover, 349 more precisely. Is a growth of 67% compared with the first 9 months of 2022. And we also have a plus of 8% compared with what we budgeted for 2023. Well, it was a pretty difficult budget to consolidate because there were so many elements that came from behind. But now it's, and we are pretty sure that the next budget will be more precise for the next year. Talking about EBITDA, we are only talking about normalized EBITDA, which is approximately 65 million RON, a 10% increase compared with the first 9 months of 2022, and but a minus 9% versus the budget. Talking about normalized EBITDA results, we have a 50 million approximately, with 4% compared with the first 9 months of 2022, and almost at the same level as the budget. About gross results, here we have 33 million, 9%. And for net results, we have 22.5, that's 6% margin. So those are the key indicators, and definitely I'm happy to respond together with my team. Here it's a more detailed slides with the performance versus budget. Those here the data are more details, and actually what was maybe not so present was the M&A, consolidating the new acquisitions that were not accounting for initial budget contribution to the increase, and operating expenses that rose by 13%, that were consisting of operating costs for acquiring company, not including in the budget, and also goodwill amortization related to this transaction. Here you will see maybe the data, and we'll discuss more detail. So financial statement also, and I will let Bogdan to continue. Financial statement are as of 30 September and are presented in the Romanian accounting format.
Hello, everybody. Thank you for joining us to our investors call. I'm here to present and explain the 9-month results, consolidated and individual results of AROBS Group. Turnover, as Voic already mentioned, it's 67% over last year, a very strong performance. with the organic business as we define it, contributing again to 67% of the total turnover. On the cost side, we have some lines where we have an increase. Is the cost of goods sold coming from the integrated systems sales that we developed this year, the new business line, but also coming from the salaries, from the payroll cost, where we have the effect of newly entered companies through the M&A, but also the increase in the in AROBS team, organic team as number of people. We grew from 774 employees to 1,235 by the end of September this year. So it's a significant growth both in headcount, but also there is an effect of the salary pressure and salaries increase from last year that we have, for whom we have the full effect in the P&L for this year. Another line that increases the part of the salaries and compensation, it's the ESOP expense, where this year we accounted on a monthly basis for the effect of each of the 3 ESOP programs that are now in place. Last year, it was by September, it was accounted just the first one, and the rest was accounted only at the end of the year. So we have also a timing difference in the recognition of the expense. Third-party expenses, just a slight increase, mainly coming from the newly acquired companies. Other operating expenses, there are effects. Some of the effects I already mentioned at our last call. It's the provision for untaken holiday and also for the receivables that we implemented as an accounting policy that we accrue on a quarterly basis rather than at the year end, but also is the effect of the rent, both rent increase through indexation, but also from the newly acquired companies, and also the travel costs that increased after the pandemic. The operating teams and sales teams started to travel to our customers, and also the marketing and the communication expense, which increased. Then we have on the intangible side, sorry, can you go back for a second? On the intangible side, we also have the effect of the acquisition through amortization of the goodwill, and also the depreciation of the assets of the companies acquired. In this way, we came up with a normalized EBITDA of 65 million RON, which is 10% over the 9 months last year, and with a normalized net profit at 49.4 million compared with 47.6 at the end of September last year. Okay, AROBS Transylvania Software individual results with a top line of 205 million RON, 24% over last year. The costs are following the trend that we saw, so the consolidation level with a jump in the salaries and the ESOP expenses. What I want to underline here is that part of the net results of 41 million, it's recognized under the financial results. It's about 20 million RON, which are dividends received from some of the group companies by distributing their profits. So we have 3 of the subsidiaries that distributed past profits, and in this way we consolidated the cash at the mother company level. We can move forward. Okay, top line distribution 76% of the revenues are generated by the software services. They are also the biggest contributor in terms of increase in the revenues. They increased compared with last year by 62%. They are also benefiting most as a business line from the M&A activity. Most of the companies were in this within software services area. But also we have the software products that now account for 15% of the revenues, also having a very nice increase of 22%. The last pillar, which is new within our ecosystem, it's the integrated system that is accounting for 9% of the business. Okay, looking also at the financial performance analyzed on the sourcing, let's say, we have the organic, which we defined as the companies within the group at 1st of June last year, so 1st of January 2022. M&A, which is companies we acquired after that moment, or so 2022, but also 2023, and Greenfield is the newly developed business line with the integrated system. What I want to underline is that the normalized EBITDA generated by the organic and then M&A, it's 25% M&A. So out of the total normalized EBITDA, 25% is generated by the M&A, which is also contributing with 24% on the top line. So on the top line and the bottom, the normalized EBITDA are having the same weight in the total business performance, while the organic having 67% of the turnover, it's also contributing with the 74% on the normalized EBITDA. So the biggest share is coming from the organic business. Okay, moving forward here, we try to slice the costs to try to explain in a better way how their development. Of course, the biggest cost is the personnel. We are a software company, products and services. So we can see that a significant part of the increase in the payroll cost is coming from the M&A. So out of 171 millions, more than 38 millions are the salaries of the acquired companies, the impact of the salaries of the acquired companies. Also, we have a significant contribution coming from the ESOP, but also the increase in the development in the current teams in the organic business and the increase in the salaries that it was impacting the full performance of this year. Third-party expenses, slight increase coming from the newly acquired companies. They are contributing about 25% in the third-party services. Cost of goods sold is directly linked to the Greenfield, to the integrated system business. Other expenses, as I said, its main costs are coming from and the increase from the rent, both from the indexation of the rent and also of the acquired company contribution to the rent expenses, travel, marketing activities, but also the accrual made for untaken holiday and for the doubtful receivables. Goodwill and amortization, yes, we have here the effect of companies acquired throughout the years 2022 and 2023. They are also bringing some assets on their balance sheet, which have an effect of increasing amortization. Looking at the balance sheet, it's a small mistake in the header. It's the first column. It's 21st December 2022. I apologize for this. and the second column with numbers, it's end of September this year. We have a very strong balance sheet. There is an increase in the goodwill position due to the companies we acquired this year. What I would like to underline is the financing debt ratio. So the bank debt divided by the annualized EBITDA, so last 12 months normalized EBITDA, it's 1.14, which we consider it as a strong indicator of how strong is our balance sheet, and that we still have a good option to finance ourselves through bank financing or any other financial instrument.
Perfect. Thank you. Thank you very much, Bogdan. This concludes our formal part of this call and the presentation of the results for the first 9 months. As I mentioned at the beginning of the call, you are welcome to type the questions that you have for the management in the chat box. And I see we are already receiving the questions. Therefore, please go ahead and let us know what you would like the management to address. How we are gonna proceed with the Q&A. I'm gonna read out loud the question for everybody to see, and then we will address the questions depending on the topic. So the first question is: the individual net profit of AROBS is 41.8 million lei for the first 9 months of 2023, while the consolidated net profit is 22.5 million. This leads me to the conclusion that the newly acquired companies made about 20 million lei loss so far for the year. Is this the result of only the goodwill, or are they operationally unprofitable? And perhaps I will start here with Bogdan to address it to clarify from the financial side.
Yes, as I already mentioned in the individual performance of AROBS Transylvania, we have the 20 million RON dividends distribution from the subsidiaries that is, of course, recognized in the individual results. So this is why apparently the individual performance it's better than at the group level. Any such transaction as dividend distribution, it's offset it at the consolidated level, so it's neutral.
Thank you. The second question: when can we expect to see the financials of each company in the group? Here I will also give this to Bogdan to address the way that we are reporting at the level of the group.
We are following all the requirements of the stock exchange, so we report individual performance of the mother company and at the group level as required by all the rules and regulations. We do not provide for the time being the individual results of each of the group companies.
I do want to add here something, especially as we are in the process right now to consolidate different business line. Doesn't particularly make sense, you know, for us at least to present at the individual level each company, and as probably a few years from now there will be one area of service and one area of product and maybe integrated services. So for the time being, especially that we are working right now to consolidate the business line, to integrate the business, to extract the synergies between cooperation with the company that we just acquired. So I guess it's a long process, and we definitely want to be transparent, but for actually the extra work, it's too much, you know. As we are talking right now, there are too many companies in the group, and in many investor meetings we were asked, you know, also about the overhead that is related to to keep so many companies in the P&L. So our strategy is to integrate those companies and to add also them to the consolidated in one company, or maybe 2 or 3. So that's the end game.
And if I may add also, what is very important is that you can see that we are presenting the organic and the M&A performance of the entity. So you can get an idea, as Bogdan was mentioning, also about the contribution of the recent acquisitions versus the organic growth. And I think this is the most important aspect that does not put a significant strain on the reporting team on the other hand, and on one hand, and on the other hand, it keeps the investors informed about the current situation regarding these newly acquired companies. We now move to the next question. When can we expect the newly acquired companies to contribute to the bottom line? And this is related also to question number 1, but I will let also Bogdan address it explicitly.
So if you take out the dividend contribution and you look at the normalized EBITDA, you can see that already the acquired companies are contributing 25% to the group EBITDA. So 24% in revenues, 25% in normalized EBITDA.
Thank you, Bogdan. We now move to the next question. Can you talk about the cost structure going forward for the next 1 to 3 years?
As I said, also the first exercise with the budget has been pretty difficult for us, but we try to be more precise starting from next year. But talking about the service market, I guess Ken is referring to this. We see, compared with the last year, same time, we see definitely a slowdown in the cost for people, cost of people, or at least the request of increasing, slowing down. That's also related also to the market situation and the job market situation, but also with the Romanian taxing or renouncing to the IT benefits. So we are calculating right now what will be the impact, and will come later for at least for the next year. So we prepare the budget. As you know, we work in Romania, and we cannot control many aspects, but we try the best to compensate and to work with that element. So thank you.
Thank you, Voicu. And we have the last question from our analyst, Bram Burning. In the meantime, if any of you have any follow-on questions, please feel free to type them. Otherwise, we will conclude this call after answering the last one. So the question is the following. In Q3 2023, the adjusted EBITDA improved materially versus the first half of 2023. How much of this is seasonal, and how much is a recurring improvement in the group's profitability?
Okay, if we talk about the EBITDA as percentage of revenues, part of the effect is coming from the fact that in the first half of the year, in H1, we had significant transactions on the integrated system area, which are having only a very low single-digit contribution to the EBITDA. If we look at the dynamic, compare the quarter on quarter, it's also the effect of trying to standardize and to recognize the cost on an accrual basis, so in this way to have more predictability and the cost to be on the periods to which they are related, such as untaken holidays or accrual for receivables, things like this.
Thank you, Bogdan. And now we received several follow-on questions. So the first one is, The first one is related to personal expenses. Why are personal expenses rising so fast, even at the parent level, in a year with so many problems in IT? What should we expect from now on, considering the increased taxation for the IT workers?
For the second half of the questions, I will come up with our current strategy. We actually, being at the end of the year, we try to negotiate next year rates with our existing customers, and actually we try to absorb those increasing taxation with also increase the rates to the customers. Of course, that is sometimes difficult. With some customers, it's difficult, but what we try to do is actually to push and to migrate those costs on the customers. So that is something that we are working right now. And about parent level, a year increase is mostly because we need to create a structure, and also we need also to add different level of management that are required to manage different companies that we acquired. To also we add some integration cost, and coming to the we have appointed a person doing to create a team for developing that integration more precise and clear for integrate the companies on the top line and on the bottom line. And here is what we do. I will let also Bogdan is also to respond, if to add more here.
Yeah, one thing to add is that the pressure on the salaries that it was on the IT market, especially last year, led to some salaries adjustments that took place after the annual evaluation at the end of last year. So you only see their effect this year. This is one thing. We also didn't saw, in our case, decrease in the business. We rather saw some slowdown in the area where we activate with software services. So it was a slowdown in the growth. Maybe we had a bit more resources. We expecting to have a better increase in the projects, but we still think that we are in the position to capitalize on the comeback that we expect for next year.
Okay, going back to the question, how are acquired company performing compared to the estimated before acquisition? Some of them better, some of them worst, actually. But what I would like to say is mostly what we offer to those companies, they are multiple of EBITDA between, I would say, 4 to maximum 8 times EBITDA before acquisition, considering the EBITDA as an indicator. Some of them are doing actually better, and you see how the company report also the acquisition. Of course, all the acquisitions are into one bucket. Some of them are having bigger potential than others, and that's why we are integrating them. We are in the process right now. About discount rate, I don't know, actually. Bogdan, maybe you help, but I guess they are different in each of the evaluation of those companies.
Yeah, it depends on the specific each specific company.
Perfect. We still have 3 more questions. So what is the timeline for integration efforts? Here I will invite Voicu again to address this question.
Yes, integration is pretty tough, especially in the area. So far we decide to maintain the entities, the legal entities, to change basically not so much and let them operate with the existing management. Of course, here and there we change, some function, or we try to adjust, different in different areas. For the timeline, we expect a year from now to be in a completely different situation. As I mentioned, the end goal for us is having a service, product, and systems, as we said. So 3 verticals. Maybe there will be some intermediate, I guess, steps, but that's what we plan.
Now we have a question related to stock price. How do you explain the fall in price on the BVB after the listing? I will also, if Wojciech would like to share an answer, or otherwise.
If you are talking about the private placement, I would like, if we are talking about private placement 2 years ago, almost 2 years ago, actually the price increased. Right now, if you're talking about the BVB main market, I guess we are still lacking institutional investor in our portfolio, and mostly the retailers, because we are relying on retail market, are effective by different situation, I guess, international. So what should I say? It's not something that we control. It's more that we try to do the best, to do at our best what we know to do, and then we'll see how the market will react. But our process is the same. We want to go to the index, BVB indexes. That's our first goal, and the second is to raise some more money to continue the acquisition process. So if you look back, we invested approximately 40 million euro to perform all the acquisition, all the 9 acquisition in the last period. So we continue our process. We try to be very careful on expenses, for sure, and mother company, but also to integrate the companies that we acquired.
Thank you, Wojciech. And if I may add, it's been also less than 2 months since we transferred to the main market. So I don't think it's correct to judge the stock performance in such a volatile period in such a short period of time. So as Wojciech mentioned, we also have important plans going, continuing actually next year. And I think this will be more relevant testament of AROBS performance when we look at the price on the medium to long term evolution. We now move back to question from Bram. Should we expect an increase in integrated system revenues in the fourth quarter of 2023? Here he is referring to typical seasonality for public administration work, as I understand it.
I wouldn't go too deep into forecasting the Q4, but indeed there were projects that were delayed, that we were working on at the end of during the Q3. That might materialize in Q4. Not so much sure about this, so I prefer to respond that we are staying on budget. So that's my answer specifically. Of course, we prepare ourselves for more public administration work. As you know, we acquired a robot process automation company that is helping us into digitalization and improvement of processes in many companies, but also in the government potential project. So we invest in various verticals where we plan to also take benefits. But we are not sure if it's Q4 or can be beginning of next year, or because they are, despite that seems seasonality, sometimes they are not.
And we have the last question, also related to integrated systems business. To follow up, do you expect the integrated systems business to be a primary growth driver in the next few years?
Actually, yes, but depend on how you define primary growth. Definitely one of the pillars in the company growth. We are preparing our team and our processes within the company to be more proactive to those type of projects. On the other side, we see the products and the services also increasing. Products with definitely a higher margin than services. But there are, of course, challenges like changes in the technology, like maybe adding new features. As you know, maybe with the fleet management, we are the leader in the Romanian market. And also with Hungary and Moldavia, we monitor maybe more than 110,000 vehicles that we have under control. And what we discover also in time, those products, especially because what they offer to the market, they offer efficiency and cost control. They are actually really a strong instrument on our customer base. So I wouldn't focus on any of them. I would say that we have three pillars, and we do the best to increase on all three of them, also on the top line and on the bottom line.
Thank you all. This concludes our Q&A session, because we see we have no more questions. We would like to thank you very much for joining us. This is the last call, results call that we are holding this year. The next one on the Q4 and 2023 full year preliminary results that are going to be prepared according to the IFRS standards. That call is going to take place somewhere at the end of February or March. This will depend on the final financial calendar for 2024 that we will publish in January next year. As usual, you can always reach out to us via email should you have any follow-on questions. Thank you very much.